Hello. Okay. Hi. Thanks for joining. This is only my second live ever, so I'm not like totally sure what to do on the screen here, but I just got so many questions. So I thought I'd just get on here and answer some of the questions that I've been getting, and just connect with you guys and serve as much as I can. And yeah, thank you so much. If you are new to my page and community, drop a note, say hi. If you could help me out by clicking on the screen so this can send out to more people, that would be super helpful for me as well. But yeah, I just really appreciate you guys being here. I'm going to answer some questions that I got, and I'll start off with how about keeping cash on hand or paying down your mortgage? Now, I can't give advice. I'm not a financial advisor, but I can give you my opinion. But yeah, go ahead and tap on the screen. That way we can invite more people. I always, my opinion is always that you should never be paying off your mortgage as long as you can get more, a better rate investing your money somewhere else. So if you have a mortgage at 2% or 3% or 4%, if you can go out into the market or you have other opportunities where you can earn more than the interest that's on your mortgage, you're better off putting that into something else where you can get more. So I would say don't, my opinion is don't pay off your mortgage. Rather go arbitrage that and go get a higher return somewhere else. That's what I would say. The next question I got was what investment app would you recommend for research or and self-management? What I use a lot for research is actually Seeking Alpha. It's an amazing app to kind of see what different people are saying. You've got the bulls and you've got bears and you get people sort of pointing out all kinds of things. So it's a great way to see what other people are doing. But then I actually use Thinkorswim for my technical analysis. That's where the platform that I learned on. That is what I use for my charting. My technical indicators are on there. So I love Thinkorswim for that. But I actually use Questrade. I'm in Canada, so I use Questrade and Wealthsimple for the majority of my investing, and TD. But I also, you have to be a US citizen for this, but I do have an E-Trade account because, and that's where a big portion, so I like all of them. I have company RSUs and options from an employer in my E-Trade account. So I have lots of different accounts, and it just sort of depends on your personal preference. That's really going to be up to you. But I also really love looking at places like Guru Focus to see, what the gurus and the big investors out there are doing. I love looking at 13F filings. Sometimes I go straight onto Edgar for that, but you can pretty much Google and see what other people are doing as well. And yeah, that's pretty much it. I obviously read the news every day. I look at Barron's, Wall Street Journal, CNBC. That's sort of my morning routine, is really looking at what's going on in the markets for that as well. So yeah, another question I got was, or really a comment, cash will be useless this time. That's the difference. Cash will be worth the fire it makes to keep us warm when the lights go out, and to invest in gold and silver. And I think during inflationary times, commodities do tend to do better, hard assets. So things like gold, silver, other commodities, and real estate is typically a great investment during inflationary times. So, but I do think that having cash on hand is going to be important in the next coming months here, because there's a lot of debate. Are we in a recession? Are we not in a recession? Are we going into a recession? Is it going to be a depression? What is all the hype about? My personal opinion is that we are teetering. We're already in a recession. And on Friday, the S&P 500 at one point during the day had dipped into a 20.9% below its high earlier this year. So that already technically is a bear market sign. So are we going to dip all the way into a recession? I mean, nobody knows. I think that we will be going into a recession. So will it be all the way down to a depression? I don't know. I don't know if the Fed, or even in Canada, if government will let it get all the way down there, but it might not be up to them. So who knows? Any questions to anybody that's in here? If you have any questions, please pop them in there. I would be happy to answer them. I mean, you don't have to be rude or gross. Do you think property prices will start to drop as a result? I actually don't think property prices are gonna drop, not in Canada and not in the US. There is a huge supply constraint in housing being built, and that was extremely obvious coming out of the pandemic as well. And there's also huge still supply issues. So I don't think we're going to see, we might see a bit of a correction or a little step back. Even with mortgage rates going up, I don't really see, I don't really see property prices crashing is what other people are saying. So I don't really see that happening. Thank you for all the likes. I appreciate it. Okay, next question. If anybody has a legitimate question they'd like to pop in the chat, you can go ahead. Otherwise, I'm just going to continue to answer the questions I got from my video. How long does a recession usually last? How long can we expect interest rates to climb before dropping back down to normal? I mean, I think rates over the last 10 years or so have been abnormally low. So I think we're just sort of going back to sort of a normal place. Recessions typically last anywhere from, I mean, the COVID Pandora crash was really the quickest. It was really fast, couple months, but recessions typically last between 6 and 18 months. Back in 2008, the Great Recession was about 18 months before the market started to turn around. So it's not a long time, but it can get really scary also, depending on how long it lasts. So you gotta hang in there. There's so much to learn. Are there any books you recommend? Thank you. I would highly recommend Ray Dalio's The Changing World Order. At the moment, it's very relevant. Over my house, I have 2 on my desk right here. Skin in the Game. Have this Undiversified, Big Gender Short in Investment Management. But really, I like The Education of a Value Investor by Guy Spear is a great book. All the books by Phil Town are amazing. I could go on and on. Think and Grow Rich is an old classic. Yeah, thanks. Yeah, you're welcome. Thank you for asking. I appreciate it. Yeah, and then I'm just gonna answer some more questions. I just kind of put them into here because I really wasn't sure what to expect. It's only my second time ever going live, so the first time was a huge learning curve. So please hang in there with me. Ask me any questions. I don't really know exactly what to do on the screen here. I really appreciate all the hearts. Thank you so much. Sip of my wine because it's Sunday night and that's what I do. I love a good wine. And yes, I do put ice in my rosé. That's just how I roll. Okay, so there's going to be a new world order with it. So I don't know if anything will be for sure. So I've been hearing a lot, reading a lot about this new world order. I don't really have a huge opinion on that. I do think there has to be some sort of great reset here at some point. I don't really know what that means or what that's going to look like. I sort of hesitate to give an opinion on that because I just invest in things that I can understand, businesses that I can understand, and I stay in my lane, and I do really well that way. So yeah, I can answer investing stuff. Those bigger macroeconomic things, I don't really, I love looking at the macroeconomic factors and things that are going on, but really it's important to me to invest in things that I can understand, and that I understand the value of, and that I can sort of reasonably predict into the future. That's just how I roll. So another question I got was, buying the dip is timing the market. Just invest as regularly as you usually do. And I would agree that you should continue to invest if that's, again, this is not advice, but this is my opinion. You should continue to invest. A lot of people talk about dollar cost averaging. I think that that's a good strategy if that works for you. Well, I also practice that to a degree. I do dollar cost average into a position. So if I'm buying a company, I get it first at my buy price and then I tranche in, and I try and get my cost basis lower. So I do practice that to a degree, but you can see how that you can quickly blow a giant hole into that strategy if things get really crumbly and things really go down the shithole, because if all of a sudden we have a recession, which maybe even turns into a depression, and jobs are lost and companies close down and there's layoffs, and all of a sudden when you no longer have a job, or you need to support part of your family, or you need to downsize, or whatever is happening, which things that happen during a recession or during a depression, you very quickly, where is your money going to go? Into an investment or into feeding your kids or putting food on the table? So very, very quickly, dollar cost averaging is great when things are great, but it's typically when there's a lot of fear in the market, a lot of emotion gets involved, and it becomes really hard to allocate your capital to buying a market, especially if you haven't done your research, if you don't have a watch list, if you're not prepared. And even then, it can become really hard to look at this thing and be this thing is in the shithole. Should I still be putting money into the market? There's a lot of emotions come to play. And so I think that very quickly, that dollar cost averaging situation gets blown up, because now all of a sudden, and then what happens is, instead of, for dollar cost averaging to work really well, you have to keep buying through all of the cycles. If you're only buying when it's going up and then when it's going down, you're never actually cost averaging downwards. You're always only buying when it's on the going up. So it really only works the best if you're investing when it's also really bad and really low. So that's my thoughts on that. Having the courage to keep buying when your emotions are telling you that everything's going to shit is hard. It's hard to, even for really seasoned investors. if you have to have a lot of conviction and certainty about what you're putting your money into when the market is like going to shit all around you. So okay, next question. I'm new to this. How do I watch for the best thing to invest? And would you say to just hold off spending money until the right opportunity comes? I'm new to this. How do I watch for the best thing to invest? So, it really starts with educating yourself, building a watch list, reading, researching. If you don't know anything, you can just like start anywhere, but my preference is to invest in individual companies. I do talk about ETFs a lot because there is a place for that, and obviously it's a great way to invest passively. And if you don't want to be super involved in what you're doing with your money day to day, that's a good place to go. But you're never really going to beat the market. You're always going to be sort of at the market. And that's not the game I'm playing. I'm playing the like generational wealth game. So the market rate of return is not good enough for me. I want to do better. I want to do a lot better. I want to do extremely a lot better. And so ETFs is not really going to do that for me over the long period of time. So I've really had to learn how to research individual companies, buy them at a margin of safety price when they're on sale, and be patient, and some option strategies as I'm moving into those positions. Doing some options trading for cash flow that's what I think that you should be learning. There's a ton of resources. If you want to learn more about that, you can sign up for my membership waitlist. It's on my website, www.investinmom.com. That's where I'm going to be going into a lot more of this kind of stuff if you want to learn from me. Otherwise, there's tons of resources out there on Google. YouTube is an amazing resource. There's lots of ways that you can learn how to do that. But I would say, or at least, again, it's not advice, it's just my opinion, but I am holding off. I got into cash when my indicators told me to back in January, February, as the big money was moving out. My indicators picked that up and I was able to get out for what I wanted to. I still hold a lot of stuff that I think is gonna be anti-fragile and is gonna perform just fine during a downturn, but yeah, you want to kind of educate yourself first, and then what I'm doing is I'm holding right now. I'm just doing some options. Like the volatility in the market is great for options pricing, so I'm holding on and being patient, and I'm gonna see where this goes. And I want to get my favorite companies that I feel really certain about. I want to get them on sale. So I don't try to time the market. It's not really about timing. It's about when can I get this thing that I want at a price that's going to give me a huge margin of safety, that I know is going to be bigger in 10 years, that I know is going to do better. So yeah, I got a question here. I started investing last spring. I have most of it in dynamic funds. Now starting my wish list. Yes. Start your wish list. Do that now, because if this is going the way I think it's going to go, I think we're probably in it for a few months here, like maybe even 6 to 18 months. So it could be a longer recession. It could turn right around, but the Fed seems pretty set on continuing to raise interest rates, which is going to continue to create fear in the market. It's going to continue to drive people to sell and to get into cash. So I think that you have some time here, and yeah, super good for you for starting to invest. And I don't know how long you've been on the live, but like I said, with dollar cost averaging, you want to make sure that you can buy when it's low, not only when it's high. So yeah, just keep your watch list together. That is amazing. Have your watch list. I like to have my watch list with all of my buy prices, and then I just keep watching it and just patient. But yeah, that's amazing. Well done. Another question I got, like, what is good to buy? Help. I don't, like most investors, I don't really talk about what's in my portfolio because, I don't want to influence anybody else's buying behavior. But if you do want to know what I do and what I'm invested in, I am starting a membership. You can get on that for the wait list. Get on the wait list for that. If you're on the wait list, you'll get in at a 50% discounted price for life. That's on my website, investedmom.com. But other than that, I can't really like say, hey, like here, go buy this, because you have to do your own research and you have to have certainty. And even if somebody says, hey, like here's a hot tip, like go buy this thing, it's gonna go up. Even if I tell you, hey, I'm buying this, and you go buy it, I'm not going to be calling you up on the phone when I sell that thing, So how are you going to know when to sell it, or if you're going to hold it forever, or if the story changed, if something changed about that? Great example. Here's something I can talk about. Last year, I bought Alibaba. And where I was like, I had been busy tranching in, and then like a month ago or whatever, all of that news from China, the war started, and I was just like, this like regulatory environment is just way too much risk. It like completely changed the story for me. And I got out of most of my position because of that. And it's just like I no longer had that certainty around it, and the story really changed for me. Nothing about the business changed, nothing about the company itself changed. But if Canada or the US makes it illegal for you to own Chinese equities, like those are going to get confiscated. Like you're not going to be able to own that. So I mean, it's a big, like a much bigger conversation than that. But yeah, that would be an example. Quick question here, Renee. Are home prices going to come down in a few years or less? Right now, a bad time for first-time home buyers? Oh yeah, great question. This is my opinion, so take it or leave it, but I don't think home prices I don't think there's gonna be like a housing market crash like we saw in 2008. I don't think that is gonna happen at all. They may slow down a little bit, but they may slow down maybe in like a few months, but I don't really see the housing market or prices coming down in a significant way. There's too much of a supply constraint. There is too much of like materials and like material shortage. Sorry, I'm like trying to find my words. I need another sip of wine. There's too much of a material shortage, so it's going slow, and there's an inventory shortage of housing, and there's a lot of big corporations like buying up real estate, so they're keeping property prices propped up. So I don't see them coming down. But if you're a first-time home buyer, there's lots of there's lots. Are you in the US or in Canada, Renee? Yeah, I know everything is costing so much, but you know what? There are still. I just bought something like a couple months ago at like a really great. Oh, Vancouver. Oh, hi. Same. Same. Me too. I mean, in Vancouver, it's like, it's fucked up. I mean, it like anywhere in the lower mainland. Yeah, going north. Well, I just bought something in the interior, and I was able to get it at a great price. Oh yeah, Langley. I mean, Langley's also just like completely shot up. I mean, prices have come down in Langley a bit. But yeah, I would say like bite the bullet or get something put as little as possible down. Like when I was a first-time home buyer, I only put down 5%. I used my RRSP Homebuyers plan. So I got, at that time, I think it was $20,000 you can loan. You can take out of your RRSP for interest free, and you can pay it back over 15 years. So if you're not doing that, look into that. And you have to get an insured mortgage, but you can do 5%. And, see if you can get something to house hack. If you can house hack, oh, you didn't know about that. Yeah, look into that. So your RRSP, and I think now it's like actually more. It's $35,000 now, I think. And I did that. I'm still paying down that $20,000 that I borrowed. It's interest free. It's free money, and it's your money. So, you can still, that money can still grow, but you're taking it out. So, it's the RRSP, so Registered Retirement Savings Plan, Homebuyers Plan. There's also the Lifelong Learning Plan, which works the same, but it's for if you want to go get education, if you want to go to university, or if you're later in life and you want to do some learning, there's that as well. But it's if you have an RRSP already that you've contributed to, you can go loan from that. So definitely look into that. But I would say house hacking, there's lots of in the interior, if you're thinking of going north, there's lots of options there. And yeah, I just bought a 6-unit building in the interior, and I'm busy renovating it. And then half of them are long-term tenants, half I'm gonna do Airbnb, and it's gonna cash flow like crazy. So there are deals. There are also ways. Oh yeah, looking at Creston. Yeah, nice. Wow, I didn't know. Yes, my husband and I both do through work. Okay, so yeah, go. It's amazing. Yes, definitely. Kamloops is lovely. Yeah, Vernon area. I think you can still do well there. And in those areas, you might even be able to get a VTB, like an owner financing or vendor take back, which means that the owner of the house would put up some financing for you, and then you can often put less down. So look into some of those options. You can use other people's money. That's how I buy real estate. I only use other people's money. I don't use my own money anymore. But yeah, you got options, but you're gonna have to do some digging for sure. Okay, amazing. For anyone that just joined, if you could help me out by just tapping the screen, it'll send the live out to multiple people, and it'll help get their questions answered. I really appreciate that. Thank you so much. Okay, next question. People are saying we are in a recession. People can't figure it out yet. I mean, I think that we are already in a recession. That is my opinion. And I think we're going to continue to see some weakness in some areas too. Finally at the point where I'll be able to buy a house, but they have all shut up. Yes, this sounds like your question, Renee. I was putting some on the side here. Okay, so buy stocks that pay dividends. I mean, there's lots of, there's so many strategies out there. You can have a dividend strategy if that works for you. I don't necessarily look for dividend paying stocks because I would rather the company reinvest that money to grow it long term than to pay me a dividend. So, there's just different ways of looking at it. But yeah, if you want to buy stocks that pay dividends, I mean, most dividend yields are not super high. I mean, if you're buying a stock to get a 2% dividend, I mean, I don't want to make 2%. That's not good enough for me. I want to see that company crush it, do more acquisitions, expand their operations, like crush their earnings, crush their free cash flow, their return on invested capital. Like that's what I want to see happening, so that that stock price can go up to what the business is worth. That to me is better. So I don't necessarily go just for the dividends. Okay, cash paper money will become a thing of the past after the Great Reset. Canadians, we are seeing more and more people tapping cards, phones, goods and services. Yeah, so like I said before, I've been reading about this Great Reset. I know crypto is, a huge disruptor, and that we might go to a completely cashless society. I don't see that happening globally soon. I think in North America, we are, we think that the whole world lives the way that we do, but there are third world countries, especially like African countries, are not ready to go cashless. Like it's not, I don't see that happening yet, but I do think that there is something coming, and there is some sort of money supply, like reset thing. I think it's necessary, but I don't think it's going to be like an overnight, no more cash. I don't think like most of the countries in the world are ready for that. Cash is still heavily used in third world countries. So it would be, and especially like in rural communities and like rural places, Africa, South America, island countries. So I think that there's still some stuff going on there. Okay, well, if I don't have any other questions, you guys, thank you so much for coming and hanging out with me. This is my second live, so I don't like totally know what I'm doing, but I'm here to serve and to educate and answer questions to like the things that I know, what helped me get to where I am, and the strategies I use to become a multimillionaire. Should we wait to buy a home? Time in the market is better than timing the market, and I don't think that prices are going to come down significantly here. And I think the second house prices come down in a big way, like they did in 2008, I don't think that that's going to happen. But if it does, I see major corporations just like getting in there and like snapping them up. So that'll like prop up the housing market. So I don't necessarily see the housing market crash. So should you wait to buy a home? I mean, nobody can answer that. I certainly can't give you advice on that. I can just give you my opinion. But if you have your plan, if you have a down payment, and honestly, like I don't even use down payments anymore to buy properties. Where are you? Are you in Canada or in the US? Maria McIntyre. If you're in Canada, the minimum down payment is 5% if you're a first-time home buyer. In the US, with an FHA loan, I think it's 3.5%. So you don't have to have a lot. And honestly, I think interest rate, like I'm aggressively trying to acquire properties right now because I think interest rates are going to continue to rise, and I want to lock in like the interest rates that we have. I mean, interest rates in the US already went from like 2% to like 5.5%. It's just going to keep, like the Fed, if you're in the US, like the Fed has said, like they are aggressive, like that we're going to see, interest rate hikes. Whatever you're waiting for, you're going to pay more for in a mortgage payment with the interest rate. And depending on all kinds of things like your credit, what you can afford, you might get priced out. So I don't know that waiting is good. I would probably try and get in there and lock it in, and use strategies like other people's money or house hacking. Find something that you can rent out as a mortgage helper, and that equity will continue to build over a long period of time. So I don't know if New Brunswick. Oh yeah. Oh, New Brunswick still. I've been like looking there. Yeah, I don't know. I if you're ready, I think like I'm a huge advocate for real estate. Like and also, this is now like little like out there, but if we're going into like a deep recession or a depression and a heavy inflationary environment, hard assets does the best. Real estate, commodities, gold, silver, like all kinds of commodities, they usually go like operate in a cycle. And so commodities go up during inflationary times. Real estate does really well during inflationary times. So, if that is our future here, then real estate's going to be a good buy for you. So again, it's not advice, it's just my opinion, but yeah. Everything is going 100K over asking where I live. Yeah, no kidding. Same. That's why I am not like currently if you're buying for yourself to live, I mean, obviously you have like a where you want to live situation, but if you can move, like don't be tied to buying where you live. If this is for an investment, you don't have to buy where you live. You can get a property manager and you can buy where you can get the best deal, and where you can get undervalued properties and get them to cash flow for you. So you can be pretty hands off. So that's, 100K over asking. Even in so many places in the US, like things are still, it's calmed down a bit from January, February, but yeah, it's still, I don't think property prices are coming really down in a big way. I think it's going to continue to go up. Just saw your TikTok. Do you think right now we should be saving to save or saving to invest? You should be saving. You should never be saving to save. Saving is only like an intermediary action for the purpose of investing. So if usually, like, my opinion is that you should pay down your bad debt, which, consumer high interest debt, really. If it meets your family needs to have some sort of an emergency fund, save for an emergency fund that's like accessible, but then you should immediately be looking to grow that money. So you should always be like saving to invest. Don't just putting your money in the bank is like the worst thing you can do. They pay jack shit. They're not gonna give you fuck all. They take your money and they go put it into life insurance, put it into the market, and they go make a shit ton of money off of your money that's just sitting there getting 0.01% interest. So do not do that. That's my opinion. Definitely save to invest, but I would say at the moment the market's very volatile. It looks like it's coming down. To use this time, put together a watch list of companies or ETFs or funds that you want to invest in, whatever meets your individual needs. Go and now is a good time to hold cash, not for too long because inflation will eat it up, but it's good to hold cash because you're getting ready to pounce when things hit your buy price or margin of safety price, is what I would say. Oh, you're so welcome. Thank you so much for joining and for all the questions. I really appreciate it. I can just kind of, talk about the things that I did. I went from being like in a lot of debt, just like divorced, separated, like really high conflict situation, had to buy a place that I wasn't necessarily ready for, and was in a ton of debt. And in like 6 years, was able to turn that like 6-figure debt into multi-millions of dollars. So I feel like everybody should know how to do that, and like nobody should be like should feel like handcuffed or like tied to like a bank or a financial advisor or somebody that doesn't, like, nobody is going to do better for you than you're going to do for yourself. So yeah, that's what I think. I love real estate. I'm an angel investor too. Invest in like small startups. But the stock market is a big part of my wealth. Real estate's a big part of my wealth too. I love real estate. I love renovating. I do almost all of my own renovations. I love that. So, but yeah, the stock market can be like a big wealth builder, but you gotta go in like with a brain. You know, it's not a gambling machine. It's like, you shouldn't treat it like you're going to Vegas. You need to know what you're putting your money into. Okay, any other questions for me? Anything I can answer? I'll have a sip of my wine because, you know, that's how I roll. Love rosé. It's the spring, so it's like rosé time again. Yay. Okay, well, any other questions, you guys? I'm like excited to see what the market does tomorrow morning. I have some trades that I'm hoping to place that I'm like really excited about. So so there's that, and then, you know, just sort of working on. But how wild is TikTok? I mean, I just got on here like a few months ago. And I was like really inspired by, you know, my dad just has worked his entire life, and made, like, you know, he's at retirement age, like 67 or something, 68. And he still feels like he can't like quit his job, and he still feels like he has to work. And I'm like, that cannot be my life. Like, I cannot be sitting at like almost 70 years old and be so afraid to retire and like love my life. So I set a goal for myself. I'm like, I'm gonna retire like in the next like 2 years. So yeah, I went from like being in debt and like being a hot mess to like multi-millions of dollars, you know, through lots of different ways, through my career, negotiating, like increasing my income, negotiating higher pay, starting to invest in real estate, really like doing deep dive into the stock market, how to invest properly with a brain and not just with emotion or meme stocks or like not like no momentum or swing trading or momentum trading or any of that stuff. Really like deeply understanding what you're buying, and I've had like amazing success with that. So I am happy to share all of that. And if you want to know the exact steps that I took, there is a link in my profile. It's like a 12-page ebook. It's like worksheet style. You can like go get that, and that is exactly what I did. Is like the steps in there, and it's for free for you. So if you want to go check that out, you can do that. That is exactly what I did to get where I am. But I'm gonna say good night. Thanks for hanging out. Always like drop a question in my comments. I try to get back to everything. I'll try and do more lives. This has been super fun. Sunday night with my glass of wine. But yeah, I appreciate you all for being here, for listening to me ramble on. I hope I answered most of the questions that I could. Thanks, pals. Now I gotta figure out how to get out of here. Like I said, this is only my second time ever. End live. Okay, yes, I'm gonna end now. Okay, bye.